The inflation numbers that came out on Friday were 5.4%. Martha, do you think this concern with inflation is overdone? I mean, to me, it seems a lot less scary today than it did when Zhu Rongji was in office and inflation was double digit. And arguably, the economy was much less productive than it is today.
Yeah. Maybe just follow up whether how to judge whether it's good inflation or bad inflation. Is I guess is driven by both economic and political concern. Is economically you can have many arguments what kind of inflation is good for the growth for the economy, but put in the country or China's context is always have a political issue. Look at the inflation number. Several kind of consensus number, although I don't totally agree, kind of above 5% is a worrying number. But in fact, you consider, say, last year, many people's income growth over 20% to be raised 10 to 20%. 5% inflation is quite okay. But anyhow, that's inflation is always have a political implication. That's why we are seeing dynamic policy response to inflation. We are very likely is at a late cycle of the tightening measures. Because this time around, China does have structural inflation pressure, given the labor issue, given many cheap costs to be normalized, like land, environment costs, etc. But this cycle still is largely driven by cyclical factors. And such cyclical driver behind cyclical factors is partially driven by excessive liquidity accumulated in the financial system after the stimulus. Yes.
I just wanted to make one point that Anthony made earlier today, which is, about the fact that China will be growing a lot faster than Western countries. And he was talking about the fact that the financial crisis has really kind of crippled the Western countries, which is my word, not his word. But you will see slower growth in the West, and I think you will see higher inflationary pressures in the West because China will no longer be a source of deflation, but more a source of inflation. But I'm going to turn to Raymond and then finally to Stephen. And that's, from your point of view, Raymond, do you see wage inflation as a good thing that will contribute to more retail demand, which is, as you pointed out earlier today, growing at double digits?
Yeah, I think for the wage inflation, we need to look in this way. 2010, we know a lot of factories, they start to increase salary, which is pretty good to me because mainly who gets the salary increase, that's the workers of factories. So how many people there? You're talking about 100 million, 200 million, or even 300 million people there. So assuming each will get 2,000 RMB increase from the wage salary per year, then it's about 200 billion to 400 billion incremental discretionary spending for mass market. It's for mass market. And those workers, they don't buy property. They live in the dormitory of factories. They eat in the dining room of factories. So incremental money means a lot to mass market consumption. So that's why if you look at a lot of consumer companies or consumer stocks, actually those stocks which focus on mass market, they perform better even than some.
And what sectors are those in?
For example, like sportswear. Sportswear, mass market sportswear, the share price or their earnings performance better than the mid-class level. So that's a kind of example to show.
That's great.
This area is coming. I think I have some view on that is because when you don't have much money in your pocket, what kind of consumer you are. In China, those are 300, 500 million people. They are not the real consumers. They are basically, they buy whatever cheap.
So you're not looking at the middle class, which people talk about as 600 million.
Yeah, I talk about middle class, but middle class has been very well talked for the last few years. But mass market is somehow is a little bit ignored or not so consensus there. So I think that's a kind of new driver for China. And especially give an example is that all department stores, Shanghai, Beijing have a lot of department stores. Department store in Shanghai and Beijing, the same store sales growth there, 5% or better than 10%. But department stores in Wuhan or in central China, second tier, third tier cities, they're talking about 20% or even 30% same store sales growth.
And that's, of course, one of the themes that Fidelity has been focusing on as a broad investment theme, right?
Yes.
Which is to follow government policy as it moves inland and is encouraging development inland, which has to do with infrastructure and the growth of consumption in the interior and not just along the eastern seaboard.
Yeah, I think I remember one story, I think it's 2009. I went to Changsha to attend a conference. Because at that time, people talk about a lot of lending to local government. People worry whether this will be the non-performing loan, etc. But I went to Changsha, I talked to the taxi driver, and I asked the taxi driver that, well, how many infrastructure investment you had? So he said, a lot. We have a metro system, we have 2 bridges and expressways, and etc., etc. But, well, I think, how is the traffic improved? He said, well, the first year improved a lot, but second year, look, it's still very crowded because the car population in Changsha, the growth you're talking about 30 or 50%. With this kind of growth, definitely you see the real consumption there and can fulfill the Western investment.
Thank you, thank you. I am now going to turn to Stephen. As I was preparing for this, Stephen, I thought, you have the best job. To what extent? Because you get to invest in Greater China. And I thought, to invest in Taiwanese companies who are profiting from growth in China is kind of the best of both worlds, because you have the transparency and the good corporate practices of a company in Taiwan or in Hong Kong or even Korea or Singapore, but they're all capitalizing on growth in China. Is that the right way to see it?
Just to clarify, first of all, I also manage a single country China fund, just like Anthony and Martha. And on top of that, I also have some other Greater China portfolio. But just to answer your question, yes, because of my, when I was an analyst within Fidelity, I already looked at many other countries throughout Asia Pacific. So it's always my style that when I see an interesting China theme, I will also look for other stock ideas in other countries within Asia Pacific. And in the case of Taiwan, when investor like myself, when I see, for example, certain technology companies in mainland China, Hong Kong, they may not be up to the standard, but there are some interesting stocks in Taiwan. They are up to the challenge, then they belong to world class, and I will buy those.
What sectors are those in?
Technology sectors notoriously has a very short cycle, but at this point in time, I can give you 2 examples, right? There are some companies who is acting as the middleman between the Western global, like the Intel and Texas Instruments, and at the same time, they act as the logistic provider as well as advisor to all these miscellaneous electronics companies. They provide real-time insights to the companies in Greater China as well as these Western big boys, so that they can know they know that when to stuff the necessary chipsets to produce what sorts of ideal products at the right time. Another thing as well is we all talk about tablets and smartphone, and actually Taiwan has a number of companies which excel in this area, and they are competitive globally.
Thank you. And thank you very much for your attention and for giving me this chance to moderate. I am so grateful to all of you. Thank you very much.